Welcome to the webinar. You have entered as an organizer and may now speak to any other organizers or panelists on the line. When you are ready to begin the presentation, press the Start Broadcast button on the Go to Webinar control panel to allow all attendees to hear you. This system will notify you once you begin your broadcast. The broadcast is now starting. All attendees are in listen-only mode.
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today's Tuesday. Feels like Monday. 17th day of December, 2024. Yep. Hiccup with GoToWebinar. Never seen it behave quite like that. It's done some weird stuff over the years, but that was really weird. Anyway, thanks for joining us. We're glad you're here. Whoever you are, wherever you are. It's the time of the season. Oh, yeah. All right. This afternoon broadcast is open to the public. Everybody everywhere on planet Earth with an internet-connected device. Unlike our first broadcast each trading day, that one's private. You got to be a member or a trial member to get in there. When Michael joins us later in the broadcast, he will show you step by step how you can take the free trial and find out if what we do will work for you. So we're just going to dive right into our daily devotional. We're starting a new topic today. Oh, and by the way, there are two different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Just click the link, fill out the form, and you're done. Going forward, every trading day, you'll get an email about an hour before this broadcast starts. So at 12 noon Eastern, all you have to do is click the link that's in that email, and it'll automatically log you into our platform. The benefit there is you have access to the question box, so you can ask questions and participate in the discussion. Now, during the first 50 minutes of the broadcast, I'm unable to monitor the YouTube channel chat. So that's another good reason why that's the best way to get logged in. Okay. Now, not only do we broadcast live every day on our platform, but we also simulcast on our YouTube channel, youtube.com/CFRN. That's all you got to remember, CFRN. You already know the YouTube part. Not only do we broadcast live, but we archive each and every daily broadcast. Currently, there's over 2,700 daily episodes archived for your educational and viewing pleasure. And if you're the curious sort and would like to see how we've evolved over the years, thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. If you don't have anything better to do, you can do that. All right? Okay, the topic of our new devotional for the next 12 days, I guess right up to the end of the year. Strengthening your faith with the heavenly gifts. Our scripture today, 1 Corinthians 12, 1 through 11, and I'm going to share it from the Message translation. What I want to talk about now is the various ways God's Spirit gets worked into our lives. This is complex and often misunderstood, but I want you to be informed and knowledgeable. Remember how you were when you didn't know God, led from one phony God to another, never knowing what you were doing, just doing it because everybody else did it. It's different in this life. God wants us to use our intelligence to seek to understand as well as we can. For instance, by using your heads, you know perfectly well that the Spirit of God would never prompt anyone to say, "Jesus be damned," nor would anyone be inclined to say, "Jesus is Master," without the insight of the Holy Spirit. Now, this is Paul writing, of course, one of his famous letters, this time to the church at Corinth. Picking up in verse 11, God's various gifts are handed out everywhere, but they all originate in God's Spirit. God's various ministries are carried out everywhere, but they all originate in God's Spirit. God's various expressions of power are in action everywhere, but God Himself is behind it all. Each person is given something to do that shows who God is. Everyone gets in on it. Everyone benefits. All kinds of things are handed out by the Spirit, and to all kinds of people. The variety is wonderful. So, let's talk about the gifts. Paul describes the gifts of the Spirit as free gifts that God gives us to support and build the church. They are not obtained by merit, but are a blessing that the Holy Spirit grants us so that each of us can do his part. These gifts are intended to unite us as a community, allowing each to contribute to the common growth and expansion of faith. Paul lists 9 gifts, which we can group into 3 broad categories: gifts of word, works, and knowledge. The gifts of the word include prophecy, the language of wisdom and silence, science, and tongues and their interpretation. They help us communicate what God is revealing to us, orient believers in faith, and help us understand the divine will. The gifts of works include faith, healing, and miracles, which manifest God's concrete action in our lives and help us experience His tangible power. Finally, the gifts of knowledge, such as the discernment of spirits and the language of science, help us recognize what comes from God and receive profound insights into the spiritual journey. The heart of this plan is not to do a formal or theoretical study on these gifts, but rather to encourage us to live in harmony with the Spirit, letting Him surprise us with the gifts He wants to give us for the good of the community. Life in the Spirit is made of oneness and willingness to serve. We are called to receive these gifts with humility and use them to support those around us so that our faith becomes more concrete as we live it out daily. Join me in a word of prayer. Heavenly Father, thank you for your many blessings. Thank you for the gifts of the Holy Spirit given to each of us for the common good. Help us to recognize, develop, and use our spiritual gifts with humility and love. May we work together in unity, honoring each role within the body of Christ. Guide us to serve one another faithfully, always relying on your wisdom and power. May everything we do bring glory to you. It's in Jesus' name we believe and pray. And everybody said, amen. Amen and happy Tuesday. A day that feels like a Monday. Okay, let's do the numbers from around the world. Start here in the U.S. with the cash markets, or the indices, as they're called. The Dow's down 251 points. The NASDAQ is down 70. S&P 500 down 23. And the Russell 2000, or man in the street, down 22 points. That's almost 1%. So we may see some lower prices before this session ends. In the commodity basket, crude oil is down $1.17, trading $69.54 last. That's a drop of almost 1.75%, or $1,170 per contract traded. Gold down $15.20, trading $26.54.90 last. Silver down 16 cents, trading $30.89 last. In the Asian markets at the close, the Nikkei dropped 92 points. Shanghai fell 24. Hang Seng down 95. And in the European markets at the close, FTSE down 66, almost 1%. The DAX down 67. The CAC up 8 points. Is that the only green on the screen? It is. The CAC, 8 points. Canada. I guess they're excited because they're about to become the 51st state. Imagine that. You know, Justin Trudeau's number 2 walked away today. Turned in her papers. Said, I don't want to be a part of this anymore. And Justin's not real popular at home. So, who knows what may happen. Let's go to the news. Maybe there'll be something in there about it. On a very somber note, we start the news. At least 2 people were killed and 6 injured after a shooter opened fire at a K-12 school in Madison, Wisconsin yesterday. Now, I read somewhere else, oh yeah, it's a non-denominational Christian school. Okay. The suspect also took their own life before encountering police, according to reports. Officials have not publicly identified the shooter. However, multiple accounts suggest the shooter was a female teenage student at the non-denominational Christian school Abundant Life. In a press conference yesterday afternoon, local police described the victims as a student and a teacher. No motive for the attack was offered as of yet, but officials recovered a single handgun and described the condition of those injured as ranging from minor to life-threatening. As of this writing, no information has been revealed about the victims. Now, they don't say it in this article, and I may be way off, but is this the first female mass shooter incident we've had in America? I mean, I don't recall any other ones. Maybe there have been. Germany's government collapsed yesterday after Chancellor Olaf Scholz lost a vote of confidence. A caretaker government is now steering Europe's largest economy, with snap elections planned for February 23rd. So, the U.S. is not the only one without a commander-in-chief. Scholz, well, we have one, he just hasn't been sworn in yet. Scholz called the unusual vote last month after firing his finance minister over differences on tax and debt policy, triggering his coalition's collapse. Some analysts suggest the vote played out as intended, spurring early elections. Scholz hopes will deliver his center-left Social Democratic Party an outright majority. Still, recent polls suggest the center-right Christian Democratic Union is on track to return to power, with the conservative populist Alternative for Germany polling in second. The collapse of Germany's government is the latest in a string of political upheavals this year. Incumbent parties suffered losses or setbacks in at least a dozen countries. The economy is regularly cited as a leading concern for voters, with inflation up across the globe. And let me put in my 2 cents. People are sick and tired of all this stupid green nonsense. Man, it's almost destroyed us. Thank God, come January 20th, we have someone with common sense at the helm. Former talk show host and Aussie Media co-founder Carlos Watson was sentenced to nearly 10 years in prison yesterday for attempting to defraud investors and lenders by lying about his now defunct media company's finances. The sentencing comes 5 months after a federal jury convicted 55-year-old Watson and Aussie Media of conspiracy to commit securities and wire fraud. Watson was also convicted of identity theft. The scheme included forged contracts and false claims about the company's 2018 through 2021 earnings and audience size. Aussie's chief operating officer also misrepresented himself as a YouTube executive during a 2021 conference call with Goldman Sachs. The bank was reportedly considering a $40 million investment in Aussie, based primarily on self-reported readership numbers and the purported relationship with YouTube, which did not exist. Aussie Media was an Emmy-winning digital media platform popular with younger consumers until it shut down in October of 2021 after reports emerged questioning its business practices. Watson has denied any wrongdoing. I didn't do it. That's what he said. There's a podcast out there about the unraveling, write this down, the unraveling of Aussie, O-Z-Y, media. And I'm sure the video will pop right to the top in your Google search. Okay, for some market news. Nvidia stock sank more than 2% early today. Now it's down only about 1%. As investors grew cautious that the AI spending that has fueled its rise could ease or spread to rivals. Shares of the AI chipmaker were down roughly 14% from its record high closing price of $148.88 in early November. Now, the market in general, as you know, it's a big red radio Tuesday. We only had one market around the globe that was green, and that was Canada, the CAC. Markets are waiting for Fed policymakers to kick off their final gathering of the year amid almost total conviction that a 0.25% rate cut is coming tomorrow. Some on Wall Street suspect it could be the last cut for quite some time as inflation proves persistent. Given that, the focus is on clues to the path of rates next year, and in January in particular. I wrote a piece last night in the discussion group regarding this very thing. Tomorrow, we assume we're going to get the 0.25% rate cut, but listen very carefully to Jay Powell's words at the press conference when he delivers his scheduled speech and answers questions from the audience. Because I think he's turning hawkish, which is a lot like bearish. But now I know where bull bear came from, but the whole hawk dove thing, I don't know the history of that. I'll figure it out and let you know one day. MicroStrategy Incorporated's entry into the NASDAQ 100 opens up the largest corporate holder of Bitcoin to a new and untapped investor, the index tracking juggernauts. Yet Wall Street pros warn the oncoming march of these price-sensitive, insensitive investors threatens a new source of vulnerability in a stock that has soared more than 500% this year on booming demand from retail investors as well as hedge funds, capitalizing on its volatility. Bank of America says that stocks are flashing a sell signal after cash holdings tumble. Fund managers have been reducing cash holdings to a record low and pouring money into U.S. stocks, triggering a metric that Bank of America says could be a signal to sell global equities. I also wrote about this last night in the discussion group. Cash as a percentage of total assets under management dropped to 3.9% in December, a move that in the past has been followed by losses on the MSCI All Country World Index. Allocation to U.S. equities surged to a record high of net 36% overweight, according to the B of A survey. Now, we're going to talk about Reed Hastings, the big guy over at Netflix. Remember when there used to be these little stores where you could go to? They were in practically every strip mall. And you could rent a video, take it home, have a movie night. You don't see those stores anymore, do you? Well, Netflix tried to sell their idea to this unnamed video store monopoly. And they said, nah, pass. And so now today's news: Netflix founder and CEO Reed Hastings, who got turned down by the video store people, has made the annual list of the biggest charitable donations from individuals or their foundations, totaling nearly $6 billion in 2024, with half of that coming from 3 contributions of $1 billion or more each. 2 of those 3 gifts went to medical schools to provide financial aid. Altogether, 4 of the top donations on the list, totaling $2.3 billion, went to support financial aid. 3 contributions were made to the donors' own foundations, and those gifts totaled $2.3 billion as well. 3 other donations supported medical research or treatment, and 1 gift each went to support civic engagement and arts and culture. Topping the list is a gift from Netflix co-founder Reed Hastings, whose net worth Forbes estimates at more than $5 billion. Hastings and his wife, Patty, gave 2 million shares of Netflix stock, valued at $1.1 billion in January, to their Hastings Fund at the Silicon Valley Community Foundation. Now, I know some will say, well, he's just taking it out of one pocket and putting it in the other pocket. Nah, don't be so quick to judge. Brazil took extraordinary measures today to stem a precipitous slide in its currency after deepening concerns over the country's ballooning debt and deficits pushed the real to all-time lows. In the latest of a series of aggressive moves, the central bank sold over $3 billion in local markets in back-to-back auctions in its 4th intervention in 3 days. The maneuver temporarily halted a broad sell-off that's pushed the real down more than 21% this year, the most among major currencies tracked by Bloomberg. So there you have it. That's the news. Let's bring it home with our own news. Logic 247. We're in week 333. Over the last 333 weeks, we have issued over 18,600 individual handcrafted alerts, and we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. This week, through 6:30 a.m. Eastern this morning, since the markets opened Sunday night at 6 p.m. Eastern, we've issued a total of 25 alerts. Still waiting on the outcome of 7, plus I've put some more out today. So when Valerie did the recap this morning, we had 18 actionable alerts, of which 1 or 6% would have been stopped out, again based on market structure. And that simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, the purpose of the logic alerts is to teach you how to read a chart. Yeah, you can trade them, okay, but make sure you use them to learn how to read the chart. Because you don't want to be dependent on me or anybody else to tell you when to get in and when to get out of the market. You got to learn this, okay? If you want to trade for a living, you got to learn how to read a chart. And there's no simpler way to learn than by properly using the Logic 247 alerts. And again, as a bonus, if you want to trade them, okay. But make sure you use them for the reason they're created. Each one has an entry price, an initial target, additional targets, and a final trade to target. They can come out anytime around the clock, 24/7. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Long before we had Logic 247, we had our original alert service, the concierge trade alerts. They're a little bit different. Different how? Well, number one, they don't come out around the clock. They're published as a static report. Shortly after the... Oh, that's funny. They're published as a static report. Lately, 5 minutes before the Globex Open each evening at 6 p.m. Eastern. They used to be published shortly after the Globex Open. But I started toying with this idea of making it very simple for folks to get their goal for the day coming out of the gate. Which means if you get your goal Monday night, you don't even have to work Tuesday. So the market's open Tuesday night. Well, so anyway, if you're a member or trial member, read this. It's important. If you don't understand it, ask me so I can explain it to you. The bottom line is 5 minutes before the markets opened last night. All of our members and trial members had every one of these targets. S&P 500, Emini, the Dow, the Russell, crude oil, NASDAQ, gold, silver, and bonds. 5 minutes before the market opened. Now there's going to be some days I won't be able to get them out before the market opens. On the days that I am going to get them out, I'll put a note in the discussion group that says CTAs will be out at 5:55 p.m. Eastern. Okay? All right. Daily chart. S&P 500. E-mini futures. At red and falling, we see how we spiked it yesterday, but closed below it. Now we got a red. Look at all these days. Well, we've been in this sideways range for I don't know, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. But we found support at the 62% fib extension for 1, 2, 3, 4, 5, 6, 7 consecutive sessions. Now, when a market coils up like this, it's getting ready to bust out one way or the other. And if you read what I wrote last night in the discussion group, I pointed out that we have this bullish cross down here. Now, when I pointed that out, I missed seeing that wick. So that's really already been addressed. But down here, you've got a bullish cross. That's when the blue line gets above the green line, right at the 50% fib retracement. That's like a calling card. It has like a magnetic draw. Am I saying price is going to tumble to 56.98? Now, I said last night this isn't a prediction, it's just an observation. But the market's not going to go sideways forever. Now, I'm not saying it can't go up. I'm just saying that for 2 days in a row, red and falling has kept it in check. And the 62% fib extension has held as support for a long time. The BBC, that's the green line, stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Now the pullback to the BBC holds more often than not, whether it's pulling from the low or pulling from above. Eventually we know it'll trade through. That's just how markets work. But it holds more often than not, like 1, 2, 3, 4, 5 days in a row. BBC, bull bear cross. Now the markets are fractal in nature. So you can put the BBC on a daily chart, a weekly chart, a monthly chart, a 30-minute chart, a 5-minute chart, a tick chart, a range chart. It's always going to give you the same information relative to the time frame you're using. In other words, don't expect daily results from a 1-minute chart or vice versa, right? Okay, it's relative to whatever time frame you apply it. I also encourage you, I beseech you, spend 2 minutes with the daily chart of whatever you trade before you start trading each day. Okay? Whether it's futures or stocks or crypto or Forex or ETFs. Why? Because the institutional traders, the ones with massive account size, who trade in massive size, they're the ones who move price, not me and you. So what you're doing is you're getting a look over the shoulder of the best, a free look. And let's face it, if you simply do what the deep pockets are doing, it makes it pretty simple to get your goal for the day. Now, a daily chart is also important because you can identify where the market's likely to find major resistance. See, on your range chart, you can't see where that all-time historic high is. You also don't know that we hit red and falling today, or that we found support once again at the 62% fib extension. You can gather a lot of information in 2 minutes and you'll be a more well-informed trader. Okay? So please do that. And hang on for me for 1 second. Okay, I'm back. So what are we going to do? We're going to spend 2 minutes with the daily chart of whatever we're about to trade, see what the deep pockets are doing, identify the major areas of support and resistance, and then go to our smaller time frames and start trading. Now, all alerts, both the logic and the concierge, are created on the 30-minute chart. There's nothing magic about 30 minutes. It's simply the time frame I chose quite a few years ago. And they say if it's not broke, leave it alone. So that's what I did. Now, the vertical line separates today, Tuesday, Monday. Back over here is Friday and Thursday. Now, these are this week's weekly trading zones, okay? This was the open last night. And we opened below the BBC. The candle opened at 61.50 and a quarter. And it dropped to 61.43. The zone's 43.44. So basically what you have is 6 points in that opening candle. It only takes 2 points to get your goal for the day. Now, when price drops to a weekly zone, we expect it to find support till proven otherwise. When price rallies up to a weekly trading zone, we expect it to find resistance until proven otherwise. So we found support, bounced us up to the BBC. We consolidated sideways for a bit, a few hours. These are 30-minute candles. And we got back below the BBC, blue and climbing, turned to red and falling. Again, we dropped to the weekly zone, consolidate for an hour and a half, and then in 30 minutes make the drop to the short target. So you could have had your goal here. Now, when the market finds support, which it did here, okay, just above this bullish cross, bounced us up to the BBC. Remember, the pullback holds more often than not. That sent us down to this zone. We bounced up, spiked red and falling. Eventually, we traded through that zone and put in a low at the Sunday night open. There's Friday's close, and there's the Sunday night. No, I'm sorry. This green candle. That's Friday's close. So this low right here, this is the Sunday night open right there. So this low right here, put in on Friday, is this low today. That's market structure. We've now pulled back again to the BBC, and you'll notice we spiked up and touched the underside of that short target. When price trades through a short target and then pulls back to it, it will often become resistance. And when you trade through a long target, price will often pull back, and that target itself will become support. So right now, price is kind of struggling a little bit, rolling sideways, but we've had plenty of movement for everybody to get their goal for the day. On the Dow, opening candle last night, 44,228 to 41.77, 44,177. So that's about 40 points. Takes 20 points to get your goal for the day. Then we attempted to pull back to the BBC, but there just wasn't enough conviction on the buy side. So we rolled right over, and blue and climbing turned to red and falling, and we hit the target. We then traded through the target and through the zone. Price pulled back up to the zone and found resistance and continued down. Now, when you see wicks on the top and wicks on the bottom and wicks on the top, that's usually not good trading. In fact, Michael mentioned that this morning in the live training room, he had more stop outs than normal. These bigger picture looks, whether it's the daily, the 30-minute, they can give you so much information that you can't see on the smaller range chart. Now, the smaller range charts are awesome for getting your goal for the day, but it's even better if you do it in the context of what's happening in the larger time frames. Okay. On the Russell, we opened last night, BBC. Remember, below the BBC, we expect lower prices. Above, we expect higher prices. Okay, that never changes. So we opened at 23.90 and dropped to 23.87. Let's see. Bear with me. 23.90 to 23.87. So about 3 points. You need 2 points to get your goal for the day. Then price did manage to get above the VBC, and it traded. It took out this high right here by a couple ticks, but it failed to take out this. And so what happened? Blue and climbing turned to red and falling, and down we go right to the target. Now why did price stop falling there? Bullish cross. A bullish cross is when the blue line gets above the green line. A bearish cross is when the red line gets below the green line. Okay? When you have a bullish cross that leads to an extended move, the first time price revisits that area, it will almost always be good support. Support will always send the market looking for resistance. Resistance will always send the market looking for support, which it found at the weekly zone. We spiked it a little bit here, pulled back to the BBC. We spiked the BBC, but the pullback held. See all these long wicks? That can make for difficult trading. But as we broke below the zone here, in almost one candle, we went from zone to zone. This candle opened at 23.78, dropped to 61, from 78 to 61. 17 points. Only takes 2 points to get you go for the day. Then we hit the zone 2360/61. That bounced us back up to red and falling. And for an hour and a half, we just kind of been consolidating sideways. Now the black step line has crossed red and falling, which means we're going to most likely retrace back to the BBC. The pullback holds more often than not, so that may give us another leg to the downside. The NQ. We opened above the BBC, so we're thinking higher prices. We got red and falling overhead, which is bearish. So this wasn't so simple a trade as the ones we've looked at previously. You wouldn't sell the open of this candle because it's above the BBC. So what would you do? Nah, pretty much nothing. It wasn't until price made this move and we took out these lows, 22368 down to 22341. That's $500-600 per contract traded, just in that little piece of the candle there. Then the market found support right here at not what I would call a typical place. That happens about 20% of the time. Support sends us looking for resistance, and you'll notice that this high is the same as these highs. That's called market structure. Then we drop below the BBC, we get a leg, get a retracement, boom. We not only hit the zone, but we trade through it. We almost hit the short target, but we found support right above this. See, this target was based on this low right here. Now, we didn't quite get there, but it bounced us all the way back to the BBC, and so far the pullback has held. See that long wick to the upside and this long wick to the downside? I would prefer to find a more friendly market to trade. I want to see this work itself out. Okay. And look at that huge rally we had in the NQ yesterday. That's a big move. All right, crude oil. Here's where we opened last night, below the BBC. But red and falling, it was right at price, right under price. And we know that's potential support because it's probably on its way to becoming blue and climbing. Blue and climbing closed us above the BBC. This candle opened at 70, we'll call it 70.70, and ran us up to 70.90. It's $200 per contract traded. So when price moves up to a zone, we expect resistance until proven otherwise. Okay. In this case, we spiked through it. Okay. This is what we expect. When price drops to a zone, we expect support till proven otherwise. So down we came. We got below the BBC here. This candle opened at, come on now, opened at 70.64. So it dropped $240 per contract to the target, but then it continued down to the zone and then traded through the zone. Now, when it found support, based on this price action back here, bounced us back up to the zone, resistance. See just how we had resistance up here? And we traded through. We had a leg and a retracement, resistance there. And that sent us almost down to the target below, to the zone below, 69.10/15. The low was actually 69.18, so we missed the zone by 3 ticks. Now the weekly trading zones, they're published every Monday morning at 6:15 a.m. Eastern for 15 years as of this past Saturday. 16 years, 15 years. They come out Monday morning, 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. So from the zone, we bounce back up to the BBC. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. Bull bear cross. I already explained that. So now we're waiting for a leg down. If price trades through the BBC, you got potential resistance here, here, here. I wouldn't touch it. Okay? Find something else to trade. It's not simple and obvious. Just leave it alone. Here's the open last night. We had blue and climbing right below price, so that represents support. Once we got above the BBC, we made a run at the zone. We didn't quite get there, but this one candle here, as an example, opened at 73.4 and ran to 75.6. So it's over $200 per contract traded. And silver opened right at the zone, consolidated like it does 70% of the time. We're below the BBC, so we expect lower prices. Down we go to the target. Bounces back to the BBC, back to the target, back to the BBC, down to the zone. Support, 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 support. Now it looks like we're trying to work our way back up to the zone overhead. And there you have it.
There it is.
It's my bearish outlook on the market. Michael is here. He will give us a recap of everything that happened in the live training room this morning. Then we'll do some live trading on the TradingView platform. And then I'll come back and wrap it up with our good word for the day.
Excellent.
Looks good.
Here we go. All right. All right. Here we are. Good afternoon, everyone. First, let me see let's see who's watching right now. Okay. Good afternoon, everyone. Today is Tuesday, December 17th. 8 days till Christmas. December 17th, 2024. If you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button. There is no credit card required for the trial. Click on that purple button and you will be sent to this registration page right here. Now on this page, all that we ask for is your name, your email, and your phone number. There are 5 multiple choice questions down here at the bottom. Gives you an integrated machine ID if you have it. That will set up some charts for you. Get access to the indicators, but if you're not going to use the indicators on NinjaTrader, then we really don't need that. It gives you TradingView login ID. All right, when you give us that, we'll be able to set you up on TradingView with the charts that we are using in the morning session. Okay. All right. Now, let's take a look at the spreadsheet. Today, we got the goal of the day on the very first trade. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today, we got the goal on the day for the very first trade. We made 48 ticks on the NQ. That put us at $2,880 with 12 contracts on. Took us 3 minutes and 1 trade. So far this month, of the 12 days this month, we have 1, 2, 3, 4, 5, 6, 7, 8 out of 12 days this month. 3/4 of the days this month. We have 3/4, 2/3. Yeah, we've gotten the goal for the day on the very first trade. It's pretty awesome. We did have one day that we didn't get the goal for the day all day, but that's okay. So far with that part of it, we're at $3,485. But with the continued trading that we did, you add another $3,800 onto that. This is trading with the diversions trade that we did, all right? And today we started out great with the diversions trade stuff, and then it went downhill for a little while, and then we ended up getting it back on track. I missed a bunch of trades. I don't think my head was completely in the game today. I'm still adapting to my recent move, and so my head was not completely in the game. But we're up 192 ticks on the NQ, minus 37 on the Russell, minus 37 on the gold, and plus 20 on the ES, putting us at plus 655 on that session. All right, so getting the gold today, we're up $240 with 1 contract. And then the diversions trade, we're up another $655 with 1 contract. We did take a total of 34 trades this morning. All right, so overall, we ended up 192 on the NQ, minus 37 on the Russell, minus 37 on gold, and plus 20 on the ES. So it was a great day. After all, it took us a while. In the middle of it all, I think I had 7 or 8 stop outs today, I think. But we had a bunch of trades too. So let's just get into it. I tried to mark up the trades as they came, even if I missed them today. So we'll get into that right now. Okay, you see all these vertical lines you see here are all trades that set up that I didn't get. Some of them I did get, like this one here I did get, this one here I did get. But you can see this right here when I don't know why I marked that one. That's not even right. The black led into the blue, and the black led into the oversold. That's not a valid trade. This one right here, you would have sold the open of this bar and made a nice move down. This one right here, you would have sold the open of that bar and made a move down. This one right here, you would have sold the open of that bar, and I did. I got a break even on it. This one right here, you would have bought the open of this bar. I did, and I got some profit on that. This is the gold. So on the gold, we got 1 tick profit. 1 tick profit on that one. All right. This one right here, you would have bought the open of this bar, and it ran up about 10 ticks. Right here, you would have sold the open of this bar. It's actually the bar that we have the line on. You would have sold the open of this bar, and that ran down about 15 ticks. This one right here, I did sell the open of this bar, and that stopped me out minus 15 ticks. So it was at minus 14 at that point. Then right here, I sold the open of this bar. I picked up 7 ticks there. That got me to minus 7. This one was a mistake I made. I shouldn't have done that one, and I was minus 15 on that. And a mistake here, I was minus another 15. After that second mistake, I was at minus 37 altogether. Then I had a break even there, and that was where we finished for the morning session. Now during the break, you can see down here, it's pretty clear to see right here where the trade was, right here. You would have bought the open of this bar right here. You would have bought the open of this bar right here. Now, right here, you would have sold the open of this bar. So this one would have stopped you out. And you would turn around and got your money right back right there. All right, so you had a long trade right there. That worked out fine. A long trade right there. That worked out great. And you had one short trade in there right here. Okay, do you see that down there at the bottom? You would have sold the open of the next bar right there, and it would have stopped you out. No matter how you slice it, that would have stopped you out. And that was it. That was what we had this morning. Okay, that was gold. We ended up with minus 37 on gold. The Russell ended up with minus 37 on the Russell too. But let's go through and see what mistakes I made on the Russell. Okay, we started out right here. This was the very first trade. I missed that one. Then the next trade was right here. Right here. Maybe I didn't miss this one. Maybe that's supposed to be right there. I think my first trade on the Russell, I picked up 10 ticks. So I think that was it right there. We picked up 10 ticks on that. Then the next trade was right here. I sold right here. The open of this bar, I ended up with a break even. And this one right here, I bought the open of this bar right here and ended up stopping me out. So I went from plus 10 to minus, it was on the Russell, so I had a 25 tick stop. So I went to minus 15 on that. And then I picked up a couple of ticks here, 3 ticks to get me to minus 12. All right, now I missed the trade. I missed this one right here that would have got me back to break even. I missed this one right here that would have been a break even had I gotten it. Maybe a stop out. I missed this one right here that would have, with a 15 tick stop, I think I would have stayed in. Oh wait, with the 25 tick stop, sorry, with the 25 tick stop, I think I would have stayed in that for the move down, and then I wouldn't have gotten this stop out that I did get right here. But as it is, I took this and I had just a couple of ticks profit on it, 3 ticks profit. All right. And then because I was out of that, I was able to take the long trade right here, and that long trade stopped me out pretty much to the tick before it went up. So at that point, I was at minus 37 on the Russell too. All right, so I think I only made one mistake in there. But you can see this right here, you would have been selling the open of this bar right here, would have been a break even, and you would have been selling the open of this bar right here, would have gotten you some profit on that one. During the break, it looks like the only leading trade would have been this one right here. That would have stopped you out. This one right here, you could have gotten it back. You would have sold the open of that bar right there. Could have gotten it back. And right here, actually, no, wait a minute. You would have bought the open of that bar right there. That would have been pretty close to stopping you out. With the 25 tick stop on that, 69.7, it drew down to 67.6. So it only drew down 21 ticks. If you got a good entry on that, and you probably would have, then you would have stayed in that for this whole move up right here. Right, you would have been buying here and you would have stayed in it. You would have stayed in it through this short right here. And that's how it would have worked out. So on the Russell, let me bring up the question box to see if anybody's got any questions. I doubt anybody does. You guys don't usually ask too many questions. This is Rico. Said amen. Amen. And let's look at the ES now. ES, here we go. So on the ES, the very first trade right here on the ES was a long trade. We picked up 2 ticks on that. I'm sorry, we didn't pick up anything on that. We missed that. We picked up 2 ticks on this. This was a short. We picked up 2 ticks on the short. Then right here, you would have sold. I'm sorry, you would have bought the open of this bar and made at least something in there. This one here, you would have bought the open of this bar. That did go up about 7 to 10 ticks. The open of this bar went up about 7 or 8 ticks. You would have sold the open of this bar. That would have just about stopped you out to the tick before it went down. And then right here, we picked up 1 more tick, buying the open of this bar. We picked up 1 more tick right there. Had a break even on that one, break even on that one. Then we picked up 17 ticks on this move right here. We bought the open of this bar right here, I think. Yeah, we bought the open of this bar, but it pulled back a little bit before we bought it. We made 17 ticks on that move right there. That got us to plus 20 on the ES, and that was where we ended it with the ES. So now, if I go down here to the TV Trades Range Trader, and I make the cover like this, you can see when just the blue pops out, or if the blue leads the way out, that's where you would have trades, right? So where it pops out, it'd be the open of the bar after it. The open of the bar after it would be right there. Pops out, the open of the bar after it would be right there. Popped out, the open of the bar after it would have been right in there. That pulled down quite a bit before it went up. I was actually in a meeting with Kyle when that happened. And the open of the bar after it, so it would have been right there. Right, that one would have stopped you out. If you got in right at the open, that one would have stopped you out. But that is what the cover is down here for, to show you, to clearly illustrate when you have a trade. Okay, that's why I created that. If you don't have that running, you might have a little purple circle after your TV trades range trigger. If you have that, click on it, and it's going to say, get the latest version, and it'll update it for you on your charts. Okay. So we ended up on the ES, we ended up with 30 ticks. Now the NQ, we were back and forth on the NQ. We actually got negative at one point, but the NQ is where we got the goal for the day on the very first trade. Very first trade, this one right here. All right, now on that one, we had it looking like this. Okay, we had the ribbon and we had a down close with the trend here. Came out of the overbought. Now, Shabab, are you in here right now? You were in the YouTube and you were in there this morning, but then you left because you wanted to see the ribbon, and I didn't have the ribbon showing this morning. I only showed it in the beginning. This right here, you would have entered right here where it pulled out of the overbought, right? That would have been where you sold on the down close of this bar after it got out of the overbought. I did do that, and I got 48 ticks profit on that. But let's throw the TV trades range trigger on there just for this. Now, with this right here, you would have sold at the top of that bar instead of at the bottom of that bar. 31 ticks difference in price right there. The goal for the day, the difference in price right there. From the top of the bar down to the bottom of the bar, big difference. All right, a whole day's worth of trading right there in one single bar, one single difference right here. You see that? You would have sold the open of the bar after this getting into the overbought with the separation. Okay, and so the rest of the trades were like that. Now, if we go through and we look at all the trades that had the separation in it, there was one right here, you would have sold the down close of this bar. Right here, you would have sold the down close of this bar. Okay, and in here, you might have sold the down close of this bar. I probably wouldn't have because it was so close to the swing low. But you're looking for it to come out of the overbought in these cases. Put in a lower swing, come out of the overbought while the ribbon's all there. All right, so you would have sold the down close of that bar, down close of this bar, the down close of this bar. Then over here, it goes from the opposite direction, the up close of that bar. The up close of that bar, the up close of that bar. Then in here, you don't have anything because everything gets all crunched up. Still all crunched up all the way through here. Without the black on there, you might have sold the down close of this bar right here, but then you wouldn't have had anything else after that. You could have sold, you probably wouldn't have because it was so close to the swing low, you would have skipped that down close right there. You may have sold the down close of this bar right there. You might have bought right here the up close of that bar. You might have bought the up close of that bar. So, I mean, either way you did it, there were decent trades in there on the NQ today. But doing the divergence trades, you don't have to worry about the ribbon at all. And down here, all you care about is there separation between these when it goes into the overbought or out of the overbought. You don't have to wait for it to close out of the overbought. When it goes in it, is there separation? Yes. If it's up here, you sell the open of the next bar right there. Right? When it's down here, is there separation? Yes. Then you buy the open of the next bar right there. Okay. The next one where it led right here. Is there separation right here when all you see is this right here on the corner? Or if I bring something else over. Let me see if I got a notepad open here. I'll use this. When all you see is this little bit right here. This little bit. The blue went down into the oversold. This is what you see on this bar. You buy the open of the next bar. The open of the next bar is what you buy. Right there. You buy that open. Okay. And then that runs up nicely. Then you're in the overbought, but you don't see anything down there, right? Now just follow this along down here. Right? Just follow it along down there. Let me see if I can spread it out so all you see is that. Yeah, there. So follow it along. See, as we move along here, right there, you were oversold. You buy the open of the next bar. Buy the open of the next bar. There's the open. There it is, 31 ticks. Profit. Keep going along, keep going along. Right there, sell the open of the next bar. Right here. You sell the open of the next bar. There's the open. And that one looks like it would have stopped you out. Depending where your stop is, we had a 36 tick stop on this. So if there's 36 ticks between here and here, it would have stopped you out. Okay. So you're going along right there. Buy the open of the next bar. Buy the open of that bar. There's 31 ticks from here to here. Buying the open of that bar. It went another 20 ticks after that. Sliding along. Right in here, nothing. See the black lid right there, not the blue, so there's no trade there. Hang on, I gotta let go of this or it's gonna mess up my windows. Here we go. The black lid, not the blue. And that brings us to right here anyway. Okay, so if we do that whole exercise again, we'll start all the way over here at the end. Is this helpful to you? Well, you got to kind of be ready for it, Michael. You know, it is moving fast, but if you watch, watch down there at the bottom. Watch right down here at the bottom. As you're going through, you get a little bit of a notice, like right there. You get a little bit of a notice that the next bar is going to be the one really that's probably going to close up, and you're going to have some separation. So right there, the open of the next bar, right there, would be your trade. Right, the open of the next bar would be your short right there. So that's the open, and that one would have stopped you out. Okay, go along again. Now the blue is oversold, so you're buying the open of the next bar right now. Buying the open of the next bar. There it is, and there's 31 ticks up. So you would have had your stop at break even and locked in a little profit on this bar. Buying the open, it ran up 31 ticks, then came back down. And if you didn't, it ran up some more. So keep moving along. This, I went short right here. I think in real time that came up first. The blue came up first, I think. And so I went short right there on the NQ. And I don't know what I got on that, but I got something positive. But looking little by little, sliding it over there, right there. The next bar you're going to sell at the open. The next bar you're selling at the open. There it is, 31 ticks, 62 ticks. Now the next bar, oh, that almost made it. It didn't quite make it there. I think I watched that one. It did end up going down, if I remember right. Eventually. There, so right there, buying the open of the next bar. See where the blue got into the oversold? Buying the open of the next bar. And there's the open right there. That's the open of the next bar right there. Okay. And that worked out. Mm. 100-tick move up on the NQ. That means the larger time frame just crossed into the oversold. Okay, and right there, buying the open of the next bar. Buying the open of the next bar. Right there. 31 ticks. Selling the open of the next bar. Right there. So it pulled back, that would have stopped you out. Buying the open of the next bar. Right there. That went like 20 ticks in profit before it pulled back down. I got to break even on it. Moving along, right there, selling the open of the next bar, right there, selling that right there. At least 31 ticks, 60 ticks, 50, 60 ticks. Selling the open of the next bar. So it'd be the open of the bar after that, right there. Now I screwed this one up because I should have been short up here. I'm sorry, buying the open of the next. I should have been buying the open of the next bar. I didn't screw that up. All right, so I went long right there, buying the open of the next bar, and I stopped out on that one. That was not a trade right there. Selling the open of the next bar. I sold it and I stopped out on that one. So I had 2 stop outs in a row. I think I stopped at that point right there and I said, you know, I think I'm gonna move to something else right now because the NQ just had 2 stop outs, doing everything right, back to back in opposite directions. So the market's not really conducive to trading in this time frame right now on this market. So I switched to a 50 range for a minute or two, and then I switched back to this one. We had some more trades, but I did stop out twice in a row right there, and those were valid stop outs. All right, and right here, buying the open of the next bar. There it was right there. It's 30, 60 ticks. I missed it, you can see. And right there, you'd be buying the open of the next bar, right there. That would have stopped you out. Then right in here, selling the open of the next bar. I did, and I ended up getting a break even on it. Buying the open of the next bar. Right there, went good 50, 60 ticks. This one right here, you'd be buying the open of the next bar. That would have stopped you out. Nothing, 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 nothing. Right, is that the end of it? Heck, that's only 10 o'clock. Is this helpful to you guys? Going through it like this, or would you rather just see me put trades on? I just want to finish this up, and then we'll just put some trades on if we can. Okay, so following it along over here, right there, you'd be buying the open of the next bar, right there, and that would have stopped you out. Right there, you'd be selling the open of the next bar, right there. That went 20 some ticks in profit before it pulled back, so we would have had to break even or better. Buying the open of the next bar, right here, right there, you're buying that bar, about 50, 60 ticks in profit. Buying the open of the next bar. Looks like that right in there. Now, if it was this one or this one, either one went about 6 points, 24 ticks into profit before it pulled back. Right here, selling the open of the next bar, 31 ticks in profit. Let's close this thing. Oops, put that back on. All right, scrolling through it. Right there, buying the open of the next bar. Right there, you're buying that. That would have worked out. It worked out for me. I think I got a better entry. So I entered in further down here. But even if you didn't get a great entry, it didn't move back 36 ticks. It moved really close to 36 ticks before it started moving up. So I did manage to get some profit on that. And scrolling. Buying the open of the next bar. Right there. 31 ticks at least. Buying the open of the next bar again. Right there. Another 31 ticks. Almost. Selling the open of the next bar right there. That would have stopped you. Well, you might have gotten your stop to break even. If you sold right there at the open, did it go 4 points into profit? I think it did. So you would have gotten a break even on that one. Buying the open of the next bar right there. You would have gotten at least a break even, maybe some profit on that. Selling the open of the next bar. I did, and I got profit on that. Some I probably just got a little bit of profit on that. Right there, selling the open to the next bar. I did, and I got profit on that. And I can't believe we're only at 1053. Selling the open to the next bar again. I did, and I got profit on that. Right here, we've been buying. This is one that happened. It went from selling the open to buying the open. But I was in the selling the open, so I didn't do the buying the open part. And you've been buying the open to the next bar right there. That would have stopped you out. Right here, selling the open again. Right here. Okay. Selling it. That gave us profit. Buying it right here. This was another one that went down right into a buy. So you've been buying the open to the next bar right here. Right there, 31 ticks. Gosh, this is taking a long time. But you can see how many opportunities there were, right? If you go back bar by bar by bar like this, you can see how many opportunities there were. Now, we're not looking to trade 1,000 times a day, right? There was a long right there, buying the open to the next bar, which I did. I got a break even. Then right here gets into the overbought, selling the open to the next bar, which I did. I took profit. Then scrolling, right there, selling the open to the next bar, which I did. Actually, I did this one too right here. You can see the blue was just a little tiny bit higher right there. And I sold the open to that bar, and I took profit. And then there was another one right there that I didn't do that you could have taken profit on. And one right there that I did do apparently, buying the open to that bar, took profit. There was another one right there I got to break even on. Another one right there that I didn't do would have been selling the open at this red bar right here. Okay, and that looks like it might have gone enough to get 4 points, maybe not. But it was on the tail of this one here, so you probably would have just overlooked it like I think I did. Buying the open to the next bar on this right there. That worked out. You might have sold the open to the next bar on this right there. That was 31 ticks at least right there. What time are we at now? 11:52. Okay, we're getting near the end. Go a little faster. Oops, let me do that. Here we go. We've been buying the open to the next bar on this right there. That would have worked out. Buying the open to the next bar on this, and that would have worked out. Selling the open to the next bar on this, and that would have stopped you out to the tick, I think. Now, it depends. It would have had to, where was I? It was selling the open to the next bar on something. Where was that? It was up here. Selling the open to the next bar on this. I had to go back 9 points from the open. So let's just call it 28. So 9 points would be 37. Did it hit 37? It didn't. So it would have stayed in this all the way through. That would have worked out. The next trade was right here. I put this on again. Next trade was right here. Selling the open to the next bar right there. Would have been a break even at least. Selling the open to the next bar again right there. Another break even. It looks like it had to go 4 points into profit. Right. Buying the next bar right there. Worked out. Buying the next bar right there. Worked out. Now we're almost there. This is what we have left to the day. Okay, so we did that one. You would have been selling the next bar on that one. And that worked out. And coming into where we are, nothing in there, nothing in there, nothing in there, nothing in there, and nothing now. Wow. Yeah, so that was our whole day. So on the NQ, the way it started, I got 48 ticks on the first trade. Then I went from 48 to 66 to 70. Then I stopped out to 34. Then I stopped out again. Those were those two stop outs right in a row in opposite directions. So I went from 48 to 66 to 70 to 34 to minus 22. Then I went to plus 6, then to 14, then to 18, then to 64, then to 96, then to 112, then to 128, then to 144, and then to 192. So I went from plus 70 to minus 22. And I came all the way back from minus 22 to get to 192. And you can see I missed a ton of trades in there. So there's, there was ample opportunity for trading, but you had to stick to your edge. right? You had to just keep trading your edge again and again and again. Now, I started out getting the goal for the day on the very first trade, and today is just another example of why, when you get the goal for the day on the very first trade, you might want to just walk away, because I traded like another 30 times, 35 times or something like that. And at some point, it's just not good for you mentally to be trading that much. Wow. And that took up like the whole half an hour to go through those things one at a time like that. But you see the value in it, right? Everybody sees the value in that? Yes. It doesn't look like we ended up with, there was a trade right here. You could have sold the open of that bar on the ES. It only has to go 4 ticks in profit on this. Could have sold right here on the gold, the open of that bar right there at 62.9. All right, that's already gone too far into profit. It's gone down 9 ticks, so you can't do anything with that now. You buy the open right here, right now on the ES. Buy the open on the ES right there. There it is. So the open on the ES was right here at 28.50. Okay. I just bought 28.75. So we'll see how this works out. My stop should be 10 ticks away. We bump it to break even after 4 ticks in profit. After 4 ticks in profit. The NQ's also got NQ's also got a trade going on right here. Now with the NQ, it would have been the open of this bar right here. So you can actually get a better entry because it hasn't gone anywhere into profit. It's only pulled back right now on the NQ. So if you were to enter right now on the NQ, you would have a better entry than what the original entry was. Okay. So this has to go up 4 points to 22.25. 22.25 before the stop goes to break even. This has to go up 4 ticks. 29.75 before the stop goes to break even. So we did manage to get 2 trades on. After going through all that stuff, we still managed to get 2 trades on here by using the separation. Now, hopefully, we'll be able to finish these 2 trades up. It is now 1:30. We do have another meeting coming up here at 2 o'clock, but I think we'll be able to finish out these couple of trades here in just a minute or two, I hope. Okay. This has a 36 tick stop and this has a 10 tick stop. Let me just make sure. That should be 0.25. Yeah, it is. Okay. All right. While these are working themselves out, let me say this. If you have not taken a free trial with us and you want to, there it goes. If you have not taken a free trial with us and you want to stop to break even on the NQ, I'm just going to lock in a point on the NQ, 2 points on the NQ, 3 points on the NQ. All right, the ES has to go 4 ticks in profit here. But if you have not, 4 points on the NQ. If you have not taken a free trial with us and you want to, go here to mytradingiq.com. 5 points on the NQ. 5 points. I'm out with 5 points on the NQ. Okay. If you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. All right. When you click on that purple button, it's going to bring you to this registration page where all we ask for is your name, your email, your phone number. If you have TradingView, give us your login ID. You really need TradingView to be able to use the charts. Okay. To be able to use what we're using right here, you need to get TradingView going. All right. So do that and we'll get you going. All right, I'm going to pass it back out to Dwayne. I hear him in the background there, and I've run over a little bit, but we did manage to get some good profit on that NQ trade. Now, you see how the NQ trade happened? And it happened actually right here. The bar pulled back before I entered. I entered down here in the bar, and it ran up here enough to get us, what was it, 20 ticks, 5 points? It was 20 ticks in profit. And now it's pulled all the way back down. So in hindsight, if you go and look at this, it's going to say this here was your entry. So that would have been just about a stop out right there. And it didn't go 4 points into profit in hindsight. But in reality, I entered down here and I got 20 ticks in profit on that move up. So, what you look at in hindsight is sometimes better in reality. And with what we're doing here, particularly with what we're doing. Because in hindsight, when you're buying the close of the bar, like you have your buy stop limit order waiting there at the close, a lot of times you're going to get slippage and that doesn't show on the chart. But with this, waiting to buy the open, if anything, you're going to get a better price. More often than not, you're going to get a better price in the actual open. So the hindsight is actually not as good as the reality when you actually do it in real time. Okay. And I want to say something. We had one of our guys this morning was it seemed like everything that he did fell apart on him, and it was because he had, he was using a Ninja Dom and he's using TradingView charts, and TradingView charts don't roll automatically, but the Ninja Doms do. And we rolled yesterday, so you want to make sure your Dom and your chart are on the same contract. Okay, make sure your Dom and your chart are on the same contract. Okay, all right, and with that, I'll pass it back out to fabulous Phoenix, Arizona in Studio A. That ES trade is back to break even right now. All right, the ES trade is just about to go to, the price was at break even. It's just about to stop to break even, but I got to finish. Fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes. Sorry, I grabbed it too quick.
That's okay. That's all right. It's all good. I'm sorry, I was...
Recap of the morning session.
Today it took 3 minutes and 1 trade to get to $2,880.
It's an awesome, awesome day.
It was indeed.
Okay. With that, guys, we've already walked through all the markets, all the logic 247 alerts, the concierge trade alerts. Let's take one last look here at the daily chart. 1, 2, 3, 4, 5, 6. Now 7 days, 7 consecutive trading days. The 62% fib extension is held as support. And as long as the market goes sideways, the VBC is going to rise to meet price. I suspect when price and the VBC meet, this is going to be one of those times when we just might trade through it. I gave a couple of examples of places where price might go. In fact, my comment was, if you can't remember the last time the market really got hammered, prepare for a hangover. We got a bullish cross down here at this 50% fib retracement. The 62% fib extension has been holding as support. But once this thing breaks, last night I brought up this bullish cross, but then I realized today that this wick already found support there. So we're just going to see what happens. We got Fed tomorrow, and that could really shake things up because Jerome has pretty much promised us a 1/4 point rate cut, and Wall Street fully expects it. However, the language when he delivers his prepared statement and takes questions from the audience, what everybody's going to be listening for is, what are the plans for 2025? Is there going to be an end to the rate cuts for the foreseeable future? If so, the market's going to react pretty negatively to that, I think. And I believe, based on everything I've read and studied, that is what he's going to say tomorrow. But I don't know. I don't have crystal balls, so we'll see. The ES itself found blue and climbing, so we're going to go back to the VBC. Question is will the pullback hold? It held here and here and here and here and here. It looks like it's going to get another chance. Now, that's today's low, Tuesday, which was also this low from Friday. If that breaks, look for support here. Then, of course, at the zone. And then there's still several zones below. So there you have it. To become a member, it's pretty simple. Send an email to support@cfrn.net. In the subject line, put "I want to become a member." In the body of the email, put your name, your phone number. We're not going to call you. But if you're not willing to put your phone number in there, you're not really serious. Okay? We don't have a phone room. We don't have a sales department that's going to call and hammer you. Okay? But you will get an email from Valerie that explains what it means to become a passport holder. And in that email, there will be a link. You click it, follow the instructions, and the second Valerie is notified you've become a passport holder, she will send you another email, a couple of them. Put them in a folder somewhere, because some of the information won't make sense to you right away, but you will need it in the future. Here's the real deal. When you become a passport holder, you're going to get 2 hours of live training every trading day. In live markets, in real time, with real money. As you trade along and ask every question that pops into your head. On top of that, you get private one-on-one mentoring. No extra charge. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, doesn't matter. Price flows the same across all markets, all time frames. From support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. You will also get the Logic 247 alerts around the clock, the concierge trade alerts every evening the second they're posted. Monday morning, you'll get the weekly trading zones at 6:15 a.m. Eastern, and you'll be able to attend the members-only workshop every Thursday night. Plus, you're going to get the golden key that opens all the private channels in Telegram. One of those channels contains hundreds of members-only workshops. Do you need to watch them all? No. But it's nice to know that you have such an incredible library at your fingertips of thousands of teachable moments. So, just send that email to support@cfrn.net. And let's wrap it up with our good word for the day. Yesterday we talked about, are you being led or being driven? Today, start meditating on the scriptures. Psalm 119:97. Oh, how I love your law. It is my meditation all the day. Andrew Murray wrote, there is a direct connection between the degree to which you succeed in life and the time you spend meditating on God's Word. God told Joshua in Joshua 1:8, meditate in it day and night, that you may observe to do according to all that is written in it, for then you will have good success. We live in the age of ADD, attention deficit disorder. We once believed that if we had more material things, we would feel happier. But it doesn't work. The more things we acquire, the more we have to protect, insure, maintain, stress out over, and keep up with. Jesus himself said, one's life does not consist in the abundance of the things he possesses. Luke 12:15. So what's the answer? In returning and rest you shall be saved. In quietness and confidence shall be your strength. Isaiah 30:15. In Pathways to Power, Merrill Unger writes, this holy exercise of pondering over the Word, chewing it as an animal chews its cud, to get its sweetness and nutritive virtue, takes time, which ill fits into the speed of our modern age. Today, most Christians' devotions are too hurried, their lives too rushed. The psalmist David wrote, I remember you on my bed, I meditate on you in the night watches, because you have been my help. Therefore, in the shadow of your wings I will rejoice. My soul follows close behind you. Your right hand upholds me. Psalm 63:6. So what am I trying to say? Slow down. Take time to meditate on God's Word. Your survival, strength, and success depend on it. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.